Good morning, and welcome to today's daily no nonsense crypto minutes. Today, I wanted to kind of talk about market cap and supply and the importance of what plays in what's called tokenomics. So a lot of times people get into crypto and they just look at the price of something. They look at the price of Bitcoin and say, "Oh wow, $50,000, man, that's a lot." Or they look at the price of, let's say, something like let's say Dogecoin, 5 cents. They're like, "Oh wow, I can buy a small percentage of a Bitcoin, or I could buy as many Dogecoin as I want." And on the surface, that looks good, but you got to look at two other important metrics. One is market cap, and so market cap. This is the market cap of Bitcoin. And market cap is actually the price times the supply. Price times the supply. Then we look at Doge. We have the price times the supply. You can see the supply of Doge is 128 billion, whereas the supply of Bitcoin is 18 million. So it's a much smaller supply. So your price would actually be getting you a bigger piece of this actual supply versus buying a few of these. Now the other thing you have to look at is just have to kind of dig into it. And so if you go in, it says circulating supply, and this bar here actually is going to get you to what the max supply is. Some coins don't have a max supply, but Bitcoin does. You see, Doge does not have a max supply. So it's the possibility of it going like astronomical in price is just not realistic because of that. So you see Bitcoin circulated supply 18 million, max supply 21 million, total supply right now 18,600,000. If we look at Doge, Doge currently has a circulated supply of 128 billion, but no max supply, meaning Doge is currently being mined. And also, the main purpose of Doge is as a medium of exchange. People use it to buy, sell, whatever. You even hear the Dallas Mavericks are going to start accepting Doge at their games. So it's not meant to store value. Versus, if I look at, let's say, Bitcoin, the main purpose of it is store value. So we kind of look at some mathematics here. If we go like Doge, right now 5 cents circulating supply this much here, you times together get you the market cap of about 6 billion. To get to $1 with the current supply, even though Doge was going to increase in supply almost daily, without a limit in sight, that would be 128 billion supply. So 122 billion dollars would have to go into Doge to get it to $1. Versus, and here you have Bitcoin. The price is right now is about $50,000. To get to 100,000 with at the current supply, you would need to add about another 900 billion, which would take it to almost a $2 trillion market cap. Now you have to ask yourself: does this, as a medium of exchange, does it have like this, of something that's going to continuously going to grow, have the possibility to have this kind of growth, or something that has a fixed supply that is going to be limited in supply, where actually it's not at the moment, it's not really used predominantly as a medium of exchange, or more of a store value? Which one is more likely? Which one is the better buy? So that's one of the things just to consider when you're looking at these coins. And if we look at that, Bitcoin already top dog, about $1 billion market cap. I'm sorry, about $1 trillion market cap. You add another trillion, get you to 100,000. 122 was this 128 billion dollar market cap for Doge would get you to about right above Cardano. All these smart contract platforms, basically Ethereum, Cardano, Binance Coin, Polkadot, things that actually have use cases that are actually being used for stuff, are adding value in the ecosystem as far as people actually interacting and creating things on them or doing things on them. So I mean, it's like I said, it's not possible. You get a better bet. You get a better bang for your dollar just by taking the same money you would have put in Doge and put it in Bitcoin. Now in the short term, it may be a better return on investment to buy Doge in the short term, but in the long term, as more and more Doge just keeps coming, but the price of Bitcoin, you have the mining, you have half rewards after a certain amount of after the blockchain split. You'll have the I'm sorry, after the Bitcoin halving, when the mining rewards are deducted in half. Well, then you have less supply, but the you have less supply being produced, but the max supply is capped. at this much here. So if I had the same amount of money and and I'm looking for more of a long term basis, I want to put my money here in Bitcoin versus in Doge, which on the short term you could definitely have a nice return on investment, or you may not. I mean, Doge could go any way. I mean, because there's so many of them constantly being produced. So just one thing you want to just things you want to think about when you're putting your money into the market, and deciding where what's possible. I mean, one of the biggest, I won't go too deep into it, but if you look back a few years ago, one of the biggest things that happened and around the 2017 cycle was that a lot of people went and bought XRP, thinking that it was going to, because at the time a lot of people were going on Coinbase, whatever, to buy, and there wasn't that many options. XRP was the cheapest, and they were just thinking it was going to be the next Bitcoin, but topped out. And over time, you would have been better off just buying Bitcoin versus XRP. But there's just some quick info on tokenomics and how you can use it to your advantage when making decisions. Hope this helps. If you like this video, please like it, share it, subscribe. Questions, info@thecryptocraft.com. Check out thecryptocraft.com for more information and more links and more resources. Have a great day.